I plan on creating over 100 plus six-figure traders in 2024. What would happen in your life if you didn't quit for once?
Running the businesses, focus on trading. Everybody is different.
Streams of income.
You're too attached.
Consistency.
Leave that job. Dream life.
It all depends on you.
I'm gonna show you guys exactly why you are not making money in this market, why you keep losing money. It's because you don't respect money in any capacity. I posted in my community and somebody commented, you know, because I posted me being up $10,000 in floating profit. I was just excited because, you know, the last few signals I called, hey, in the lab, you know, I was 6 for 6 without losing a trade. And I posted that and somebody commented, a millionaire is excited because he's up $10,000, something must be off. Yeah, you're off. You don't respect money. Have you made $10,000 in a day, in a week, in a month, in a year? Like, I don't know what's wrong with some of y'all where me posting, I'm up 10,000 because of the lab. And then the previous week, I'm up 17,000. And then the previous week, I'm up 12,000. For like a combined total of like $40,000 over the last, let's say 11-ish days, 12-ish days. And you are looking at it with skepticism and pessimism, excuse me. And it makes no sense because it doesn't matter how much money I'm up or not up. I'm being realistic. Some of you guys get carried away with watching people who are up $60,000 in 2 seconds and $80,000 in 30 minutes and they post it on social media and it says live. And you guys don't even realize, like, that's their broker that they're affiliated with. You know, Trader Nick had a video, shout out to him, where he said, you know, a broker contacted him and basically said they can show that he's on a live account. I'm in the middle of my workout right now, sorry, but I felt the need to talk because I just opened my phone over here and I saw the comment and I'm just like, this makes 0 sense whatsoever. But he posted basically saying he was talking to a broker and they were like, yeah, it'll say live. Whether you make money or lose money, you just put a bunch of lot sizes on it. And then if you make money, you post on social media and then you'll get people to sign up to the broker and then you'll get money regardless. But it's not a real account, but it says real. And some of you guys would follow that because somebody else commented, yeah, I saw this trader, he was up 120,000. Swaggy's over here bragging, not bragging, but happy because he's up, you know, 23,000. I'm realistic. Nothing is manipulated on my end. Everything is real. And it makes no sense that people are looking at it that way. And this is why you guys lose money in the market, because you come in again with this unrealistic expectation that if I want to get here, I got to make 100,000 a day. I can't be happy with 5,000. I can't be happy with 6,000. I can't be happy with 500. And that makes no sense to me because you have to start somewhere, whether it's on a you know, prop firm. Obviously, we know what's going on with my FOREX funds and the future of prop firms. These flies, I'm going to move around because these flies are trying to kill me because I'm sweating because I'm working out right now. But the reality is, that or your own broker, trade and then scale up. When I had to make something happen, when obviously like I said I'm done with reality TV and I'm never going back on it because my wife was saying I wasn't providing for her like I promised her when I was on TV the first time, because I said I was a day trader, but then I stopped day trading because I wanted to do autographs and all this other BS. I started with a $5,000 account that I got from TV and I scaled. How do you think I scaled that account up? You think I was just like, I got to make 100 G's ASAP? No, my goal was to make 1,300 a month because that was my bills. And I ended up making over 100 G's over time. I had to be okay with the $200 wins, the $350 wins, the $500 wins, and then the $1,000 wins, and then the $2,000 wins, and then the $8,000 wins, and then the $20,000 wins. And my experience, I've been in this industry for 9 years. The more you look at it that way, where you walk around with a victim mindset and a pessimistic mindset, the harder it's going to be for you to actually make money in this market. You have to look at yourself as a progress. Look at the track record. Year 1, year 2, year 3, year 4, year 5. What'd you do year 1? What'd you do year 2, year 3? Not even in terms of a P&L, but did you get better? Year 1, okay, I didn't know nothing. Year 2, now I know everything, but I'm not really profitable. Year 3, I'm a little bit profitable. Year 4, I'm really profitable. Year 5, I'm lit. I don't need a job or nothing. You guys look at it as year 1, I don't know nothing. Year 1.5, I'm not profitable. Year 1 3/4, I quit. And it makes no sense. Focus on your journey. The reason you're not making money in the market is because you're too attached to the outcome. You're too attached to, I gotta make so much money, or if I lose money, this market ain't for me. I'm not good with math, I'm not good with numbers, I don't know what to do. The market is out to get me. This trader's fake. You're worried about all the wrong things. Worry about your own psychology. Worry about your own greed. Worry about why you're getting in at the wrong time. Worry about why you don't have, like, you're getting in when you're 8 confluences late when you get in, as opposed to getting in on the 2nd or 3rd confluence. Worry about that. Fix that.
Get back into it. Get back into the art of trading. Fall back in love with it. Do what he did. Do what I did when things were getting tough, which was lock myself in a room and figure things out. Don't come out until, you had your aha moment. When I say don't come out, obviously use the bathroom, eat, yada, yada. What I mean by that is don't try to go out and try to party, do all this other stuff when it's like you have something golden right in front of you. Yeah, you're young, but at the end of the day, you're complaining that you're not where you want to be right now. And the reality of the situation is it's all on you. The success principles, the very, very, very first chapter of the success principles says, you have to take 100% responsibility for your life, period. Nobody else is the fault. Like, at blame, right? Yeah, you got brought into this world from your mother and your father. But by the time you're, 7, 8, 9, 10, 11, 12, 14, 20, 21, 22, your life becomes your decisions and your actions, things you like, things you don't like, what you're comfortable with, what you're not comfortable with, like risk, being positive, being negative, right? Being a pessimist, being things of that nature, right? Being an optimist. It's all because of you, right? So when you get back into this art, lock yourself in a room and figure things out. That's number one.
Do not try to fill your schedule up. Do more or less, the same things, just high-level stuff. So, prime example, like I said, in the day in the life of the millionaire, the most recent one that I just did, I'm at fault for packing my schedule with 30 different things. And it was really 3 or 4 things that made, the most, difference. And somebody had commented, maybe you had to do that schedule to get to where you are today. And that is fair. That is 100% fair. And maybe that is true. But the reality is right now, there's only a few things that pay me and bring me joy, right? Trading, running the businesses, spending time with my family, right? Like health, so working out, because, if I'm not healthy, none of it matters, Ty Lopez had mentioned, somebody had said a great quote where they said, when you're young, you use up all of your health to get your wealth, late night hours, 5-hour energy drinks, coffee, yada, yada. Like you waste your health trying to get wealth. And then 20, 30 years later, you spend your wealth trying to get back your health. You see people on different diet plans, hiring a chef and trying different diets. And it's like, that's the reality. So those things in general, right? Trading, business, family, nutrition and fitness, those are the things that pay me the most and bring me the most fulfillment. So that's the 4 things I'm gonna focus on. I had little stuff in there like, email this and do this and call this. And it's just like, you really can outsource a lot of your stuff. And what people don't know is that if you're making good amount of money, whether it's 6 figures or even for the 5 figures, like some people are making $7,000 a month, your life would be a lot easier if you just alleviated, a little bit of your pressure by getting a virtual assistant from the Philippines or somewhere across the world where you may pay them, $500, $600, $700. And that means the world to them, like the absolute world to them, because, the currency rate is different. So don't try to fill your schedule up. Try to, limit the things that don't bring you the most fulfillment and joy. And that's what a lot of people do. They procrastinate like, oh, I'm on the charts, but you're really not on the charts. And just focus on the things that pay you the most and bring you the most fulfillment.
Be confident in your trades. So prime example, like there's some people who are saying, like, it's all perspective, right? Back to what I was saying earlier, gold, 1937, there is no confluences to get in gold at 1930. Why are we getting in right now? Like, I'm not getting in right now, there's no confluences. And that's perspective, I understand that. But for me, one confluence is, there's a trend line coming all the way down. Second confluence is 1, 2, 3, 4 wicks to the trend line and a wick to this major cycle level at 1950. That's 2 different ones. A wick to the trend line and a wick to the cycle level. That's 2 to 3 confluences that's telling me price is reversing. We get onto the 2-hour time frame and you look at it, we got this lower high. That's 4 confluences. Moving average crossover, that's 5 confluences. It's all perspective. So it's okay to be confident in your trades or look deeper. If somebody has if somebody's trading a pair and you're trading the exact same pair, but they think they want to get in now and you don't, maybe ask them, why are you getting in? What's your confluences? And then they may tell you, and then you may learn something. You may be like, oh, Wow, you're right. I didn't see it that way. Okay, cool, great. I got you. Boom, end of story. How do you get into big trades with a small account? You see, there's an issue with that question because you're asking how do you get into big trades with a small account? Big trades mean bigger risk. It means you're putting on too high of a lot size, which means 1, 2, or 3 trades and your account may be blown. The reality is you can't really get into big trades with a small account unless you slowly scale that account and slowly raise the lot size every now and then. Prime example, small account, let's say it's $300, right? And you make about $150, 300 to 450. You use, let's say a 0.04 lot size to get that $150 over the span of a few days, right? Cool, great. Now for that 450 to try to get that 450 to let's say 700, maybe you want to use a 0.05 lot size, maybe a 0.06, 0.07. You can raise it up a little bit, but trying to use a standard lot size and you only have $400 in your account, literally all it takes is 40 pips and your account is blown. And you know how the market is. It can move 20, 30, or 40 pips in 2 minutes, 3 minutes, 4 minutes. All it takes is a little bit of news and volatility to push it and your account is blown. So don't look at how do I get big trades with a small account. Think of it as how can I scale my small account so I can end up doing bigger trades down the line.
What kind of advice do you have for them when it comes to setting out goals to get what they want? Like, did you say, I want a Ferrari pizza, so I'm gonna make this much money, or it just happened because of the money you made?
I had said that like last night on this live and everything. I'm like, yo, there's many times that I'm trading, and if I'm trading without a purpose, then I'm gonna blow that money, or I'm gonna watch that money bleed out.
Got you.
Like, there's many times that like I'm trading, and then like let's say if I'm up like $120,000, and then I close at $12,000. Why do you think that was? Because I'm not aiming for anything. You know what I'm saying? But if I had a goal on my board and that kind of stuff that I'm aiming for, all right, bomb, 120, close out. Because I'm putting that money towards something. But if I have no goals in mind and that kind of thing, that money just being made to be made.
That makes sense.
There's no kind of like goal behind that. So like I have no eager to actually close out because I'm not aiming for anything. So I feel like at the time, like I was aiming for a new car, but I never knew what. So every single chance that I get, like even on my board now, I said it says 150 over plus close. Because I have no reason to want to make more than 150, I feel like. You know what I'm saying? Like past 150, come on, bro.
So you gotta have that like as an affirmation on your board, something you see. Like,
bro, I have to. Because if it's not on my board, like I could see 150 on my charts and I'm like, yeah.
It's play money, yeah. It's nothing. I get you.
But if it's on my board and I'm saying 150 plus, I have no reason to keep on going.
No reason.
But, you know what I'm saying? But I try to actually withdraw at least $100,000 a week and that kind of stuff if I'm having like a good trading week at least. But if I have a trade floating profit, if it's past 150, I have no reason why I shouldn't close.
What advice do you have for beginner traders who come into this market and they see the stories of me, you, Q, Raul, Umar, but they're scared to get started, but when they do get started, they don't know if it's real or not, so they like quit within the first 2 or 3 months. What do you tell them to like try to keep them to keep going?
I mean, listen, man, like whether people want to believe someone's doing it or not, like someone out there is doing it, whether they're online or not. Like you have some of these like brick and mortar prop shops, like the S&B Capitals, who are like, they're fostering 8-figure traders, 9-figure traders.
Absolutely.
So whether or not you believe, well, who people online are doing it, always have that mindset like, hey man, there's people out there doing 10, 20, $30 million a year just from trading. So I think it just has to be that mindset shift. Like, hey, you know what? You don't have to believe the guy online with the Lambo or the guy online who's preaching a course.
Absolutely.
Like, even though like there's no correlation between the two, but someone out there is definitely doing it. So just have that mindset. Like, listen, even if I don't believe this guy's doing it, you know what? Like these S&B Capitals, these other brick and mortar prop shops, they have one down in Texas. These guys, Trillium, I think it's called Trillium, where they have 8-figure traders, guys. Like, there has to be that mental shift where I don't give a shit if that person is real or not. I know someone out there is doing it, and then just have the confidence to do it.
You just got to worry about yourself, really.
Yeah, and again, like even and to your point, like to people who are brand new or to people who are intermediate, like everyone's at different levels. Like I could be making, let's just say, maybe $100,000 a year from trading. The next man could be doing 500K.
Absolutely.
But at the end of the day, as long as you're making money and then you're able to kind of grow that wealth, that's really should be the main goal. Like obviously you should try to get bigger and better at trading. But again, even if someone makes 50K a year trading, that's still respectable.
Absolutely. 100%.
But I think people see like the big numbers and they get too infatuated and they discredit what they're doing.
That's, one of the most annoying things, because I made the video a while ago where it was like, somebody was like, they saw that I was happy that I was up $10,000 or even 20, and they're like, "You're a multimillionaire. Why are you excited over $20,000?" And it's like they don't understand. They don't understand how money works. They don't understand that this is not given. This is a skill that I sat down and tried to acquire for the last 9 years. Yeah.
And listen, bro, like people like that are just stupid. It's like,
Yeah.
you know what people have to do to make 20K in a single specific day or week? Like you can make 20K in a swing trade. How many people in corporate America are working a whole month just to make that same 20K?
A year.
Yeah.
People are barely making 30K
No, but even
a
on
year.
the high end.
On the high end,
like the corporate, someone who works
Absolutely.
maybe on Wall Street,
Yeah,
right?
yeah, 20K a month.
20, because
exactly.
they're doing like around maybe
240, 250 a year.
Exactly.
Yeah.
So it's like, it's all
That's a good
perspective.
point.
And bro, if you're making $1 million a year, $20,000 is still an extra 2%.
Absolutely.
And then when it's funny because like people will say that, but in the same breath, it's like, hey, if you can do, let's just say 10% on your money every single year, you're going to be super financially well.
Absolutely.
But then when it comes to trading, they look at, 20,000. Why are you happy about that? Bro, even if it's 5,000.
Even if they don't understand.
Even
And
if it's
I'm hoping you
5,000.
guys that they'll realize that it doesn't matter how much money you see somebody online makes, or me, or Omar, or Umar, or Q, or anybody else, that be happy in your own journey, whether it takes 2 years or 4 or 5 years, I don't care. Because if you make $7,000 a month, I see people who do that, and they'll see somebody online who just made 150K in a day, or right, or taking a small account to 5 million, they get like down on themselves, and it's annoying to see that.
Point number 4, before I even get into any technicals, point number 4, take profit if the market is 2, 3, 4 pips or 40 pips, because obviously this is gold, so it's different, but it could be 2, 3 pips on another pair like GBP AUD, right? Take profit if it's close to it, right? So, prime example, the market is at 1947. If my take profit at 1950, why am I waiting? I've seen so many times, said in my last video, where people were like, all right, I'm 3 pips away, 2 pips away, 1 pip away, or for gold, 10 pips away, 20 pips away, because the calculation on gold is different. For my take profit, I'm gonna let it play out. I'm gonna go to the gym, I'm gonna go to sleep, I'm gonna go be with my girl or my man, and come back and check it later. And then you come back, and then this happens. It tanks all the way back down. Then you made no profit. Now you're actually losing because the entry was at 1933. Now you're actually negative. Take profit. The market gave you 140 plus pips. Take the profit. What I see a lot of traders do, and what happened to me earlier in my days, is when I saw a setup and I believed the market was gonna, be bearish and head down, or be bullish and head all the way back up, right? I'd have it in my mind, have it in my heart, and be like, all right, I'm gonna do this, write it in the trading plan, call it a day, be like, I'm gonna check the market back in 3 hours, 4 hours. You check the market in 3, 4 hours, the market done moved. You don't miss the move already, right? Because you went to the gym, you was with your girlfriend, you was with your boyfriend, you went to sleep, you went to the movies, you were watching the NBA, and like something happened to where you weren't, effectively like managing your trade or the potential trade, right? And looking at the setup and stalking it. And this is a way for me to combat that, but also combat the fact that I don't have to be on the charts 24 hours a day, every single day, waiting for the setup, right? I'll get in right then and there. And my success, last month of September, I won 9 out of 10 trades, made over 6 figures. 9 out of 10 trades. And it was all live in the lab. They saw it. This is not me hearsay. This is not me talking in theory. This is not me hindsight trading. This is me literally doing the exact strategy I told you on live in the lab. I think I did 14, 15 webinars in September. And from those webinars, 10 of them were trades and 9 of them were winners, right? And I think the first day of October, I won another one. So it was actually 10 out of 11 if you're including like the first day or 2 of October. And I did it all live, right? And what usually happens is when I enter, let's say at that 1943 level, right? The market will definitely draw down. So when you see my posts in my lab and my alerts, it usually says, guys, I'm expecting a little bit of drawdown. If you guys aren't swing traders, you guys don't really like drawdowns, maybe be a little bit more patient and then get in when the market feels right to you. And then they'll see it, and then the market will be drawn down 1943 to 1948, 1949, 1950, right? Stop loss is at 1961. And that's the issue with a lot of you guys out there when you guys are trading. You guys will know you have a 50% chance of winning, 50% chance of losing every single time you step in a trade. And the issue is when you're losing, you're so attached to the outcome. Why? Because you placed way too high of a lot size that if you lose, you're gonna blow your account or blow half your account, which is not ideal. And the reality is, when I'm in drawdown, I don't care, because the reality is I said if I lose, it's gonna be here. If I win, it's gonna be here. The market can do one or two things, right? No matter how long it consolidates, no matter if it's consolidating for weeks and weeks and even months, right? It can only do one or two things: hit that take profit or hit that stop loss. Especially, like, that's it. That's all it can do. And then once I see, when it gets to 1950, if I see the market print something, right? Like, let's say, for instance, 2 examples, right? If I don't notice it because I'm sleeping or doing X, Y, and Z, at least I'm already in the trade. That's the point of it, right? At least I'm already in the trade. Like, so when the market comes back down, 1943 is the entry, it goes to 1910 or 1900, right? But if I happen to see it, I set an alarm. I even set an alert. TradingView alerts works miracles, right? Set a TradingView alert for 1950, 1952, once it's closer to that stop loss level, because you may see that the market may print a reversal because it's closer to where the real entry should be, the real reversal should be. It bounced off a psych level at 1950 and tried to wick up and then just came back down, right? Usually, once I'm aware of that's happening, I'm entering again, even though my first position is drawn down. But that second position is a little bit lighter, even though it's the better entry. The lot size is a little bit lower, because what I don't want to do is mirror the exact same lot size, and I'm already in like good amount of drawdown. Even if it's a little bit of drawdown, I don't want to do that. So I do I do it more so smaller, where there's half the lot size. And then the market comes back down. And once it comes down and it goes past 1943 and it creates more structure and gives me a lower high, yes, I'll move my stop loss into where that lower high is. Now it's a risk-free trade. And then I'll enter with a way bigger lot size, because, one, the first 2 trades are risk-free. And now this is the best possible entry at, let's say, 1934 for a sell, because the market gave us a lower high where we can follow, and it crashed all the way back down, right? When price corrects itself, like retraces, and then starts to head back in the overall direction that you predicted, that is where we move our stop loss to. So you see right here, higher low, higher low, higher low, and higher low, right? Those are all higher lows. Higher high, higher high, higher high, higher high. It's an uptrend, right? Right, so let me just delete those and then show you guys stop loss, right? So let's just say, and I'm gonna show you on my phone as well, but again, it's very important because it allows you to have a risk-free trade. Let's say, right here is your entry. So here's break even, right? $0 right here. Let's just imagine down here you would lose $500, right? So you're risking $500, and let's say up here, random number, let's just say you would get 2,500, right? Up here. I'm just throwing out numbers just to paint the overall picture for you, right? When price goes up, right? And let's just say it's 200, 300, 400, 500, like, follow me, 600, 700, 800, 900. So it got to like a max of like 900 or 1,000. And then it comes down 900, 800, 700, 600, 500, right? Again, just giving an example, so just follow me. And then it starts to go back up. Once it starts to go back up, this is where you would draw a Fibonacci retracement, first of all. But second of all, that, price just planted right here, right? So now this is the last higher low price just created. So now you take this stop loss that you had right here, and you go on MetaTrader and you move your stop loss to this right here, wherever it may be. Like, the price planted right here, just move it a few pips below that, and now that is your new stop loss. So now, let's say, for example, let me actually just erase some of this so it doesn't look as cluttered, right? Erase some of this, erase some of this, erase some of this. And let's do this, this, right? So now, when we move our stop loss, the original risk we had was, worst case scenario of this trade, we would lose $500. Now, since we moved our stop loss into profit, now let's just imagine this was like $600 or whatever the case may be, because we don't have an actual chart in front of me, which I'll do later on in the video. Now, the worst case scenario is we will, I'm on the eraser, sorry, we will make in profit $600. Why? Because you moved your stop loss into profit. Remember what I said, you can't just move it anywhere, because price can easily come up and then stop you back out. It's not in line with structure. Structure means if higher highs and higher lows are being created in an uptrend, your stop loss has to be below the last higher low. So up, boom, 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 boom. Entry, wherever, entry right here, right? Stop loss down here. Price comes up, comes down, And mind you, you can take partial profit. Let's say this was a psychological level, like a mid-level. You can take partial profit, but this is not the video for partial profit and full profit. I'll get into that video later. We're just talking about moving our stop loss into take profit right now, and scaling into trades later on, right? Comes down, boom. Once it plants here and goes back up, we got our Fibonacci retracement, and then this is now our stop loss. It goes up, comes down, boom, new stop loss. Goes up, goes down, new stop loss. Goes up, goes down, new stop loss. And the reason we do that is because every time price goes up and comes down and goes up and comes down, it's creating structure. Sorry guys, I don't know who just texted me, but the market is overall creating structure. So you want to be in line with structure, because what that necessarily means is if price was to break those, like break structure, you know it's no longer an uptrend. Like it's no longer an uptrend. You don't got to be in the trade no more. Prime example, in the lab, my last 8 trades, I won 7 of them, excuse me. 7 out of the last 8 trades. Boom. Crazy, right? Crazy number, right? A few people messaged me frantically because they took trades 4, 5, and 6, and they were all successful. But trade number 7, USD/JPY, was not. And guess what? This is the trade, right? I believe price was gonna head up. It was in this consolidation area for a very, very long time. It cleared the high, came through, retested, had a new trend line, had a key level right here that I did not wanna break through, had a wick right here. It showed all the signs of bullish momentum, and I still think it's bullish long term. I know it's bullish long term, but I got in at the wrong time. Got in right here. I was like, you know what? I can take it. I do believe it's gonna come down and draw down to this trend line, retouch it, but it's gonna swoop all the way back up. It just cleared through, stopped us out. It happens, but guess what? Since originally I went 6 for 6 and he made good money, or it's not, shouldn't be he, should be they. They made good money with my analysis of my trades, a few of them. They risked their entire account on my USD/JPY trade and blew it. Blew their entire account. They were slowly building their account with 6 for 6 of trades. On number 7, they're like, yo, Swaggy hasn't lost a trade yet. I'm just gonna put a standard lot size. And guess what? They blew their account. Who told you to add a higher lot size? And not by 0.01 or 0.04. They went from a 0.10 to a 0.60. 0.10 means if the market goes, 10 pips, you got $10. 0.60 means $60. So prime example, my stop losses are usually 40, 50, 60 pips because I aim for 180, 200, 230 take profits. 60 times 60, 60 pips. Sorry, excuse me, 60 pips times the 0.60. That is a lot of money. 3.6K you would have lost essentially, right? Or $360, sorry, I'm bugging. Very hot in here. $360 you would have lost in that scenario, and that would have blown your account, especially if you're going it by 0.10, right? $10, 20, 30, 40, won that trade. 10, 20, 30, 40, won that trade. 10, 20, 30, 40, won that trade. And then one trade, you just upped the lot size time like to a 0.60 and blew the account, lost $360. Nobody told you to do that. Why? Give me one reason to risk your entire account. Nothing is guaranteed in this market. Nothing. The only thing that's the reason for it is this right here, greed. Why is it so difficult to control your emotions in trading even after having the self-awareness of it? This may be the best question and may have the longest response here. The reality is you understand that this is one of the only jobs in the world where there is no cap on how much money you can make in this market. It all depends on you, how smart you are, if you know what you're doing, placing the right trades, trading the right pair, trading at the right time. It all depends on you. And the reality is, it's hard to control your emotions when you know you only have $100 in your bank account and rent is due. And if you place a button, you press a button, buy, and it goes up, you just made money by pressing a button. That is the hardest part to realize. Because no matter what, when you go to your job, a 9-to-5 job, no matter what happens, you are going to get paid for your work, no matter what. NBA, if people win or lose, LeBron can lose 5 straight championships. He's still gonna make millions of dollars. Trading is one of the only jobs in the world where you only get paid if you're correct. NBA players get paid whether they win or lose, right? 9-to-5ers get paid whether they do a good job or not. You may get fired, but the reality is you can come into work and BS and be on Twitter all day, but then act like you're doing work. You're still gonna get your check. That's not in the market. So when you're here, it's hard to control that because you just want to make money. In the NBA, no matter what, you get paid bi-weekly, which is the same as regular jobs. Regular jobs, you get paid bi-weekly. You know a check is coming, even if it's weekly. Here, there's no check that's coming. You can get paid every day. You can get paid nothing at all for the first 3 months, and then make 20,000, right? Like, it's always going to be hard. Even for me, I would never say anybody has mastered their emotions in trading. We've learned how to control it and tame it to a certain extent, but I haven't mastered my emotions. I'm still emotional based, right? Like, I understand, like, for 10 straight trades, I may be, stoic. It is what it is. Buy, sell, I lose. Okay, I don't care, right? Like, it is what it is. But the 11th trade, I may be like, being with my wife and my daughter or playing basketball, being at the water park in Puerto Rico, and then all of a sudden I know a pair is going, like, even prime example, gold, right? I said in my free Telegram, gold was going up from, it was at 1897. I said it was gonna rally up. It went to 1917, which is 200 pips for gold. And I didn't get in the trade. And the reality is, my emotions, like I said, I learned to tame it and control it, but the old me would have tried to get in at 1913, like, I knew this was going up, let me jump in. And you done got in 170 pips too late. Luckily, gold kept going up, but it could have just came back down and nobody would have been at fault, right? Except for you for taking the trade. So the reality is, it's always going to be hard. As time goes on, you're going to be able to control it and tame it better. But just take one step at a time. Don't think, I'm gonna master my psychology no matter what. That's not the case. NBA players still get emotional base and do things, and then at the press conference, like, I shouldn't have did this, I should have been better, I could have been better, I'll be better next time. That's how you gotta approach trading. I'm going to be very, very disciplined and try my best to make this trade and not be emotional based, right? Like, is it in alignment with my trading plan? Is it a 1-to-3 risk to reward ratio, or 1-to-2, 1-to-4, whatever your trading plan is? Does this match up? Do I have 2 or 3 confluences? Does this all make sense? If it does, trade it. If you lose, it is what it is, right? That's one of my best qualities. Like, if I lose, I don't care. It is what it is. It's more so the emotion in terms of, should I enter, should I not, right? Like, am I emotional based in that regard? That's harder, in my opinion, than losing. Losing, I don't care. And you guys may say, oh, it's because you already have money now, you done made it. I understand that. Back in the day when I was losing, it was very, very frustrating. But once you get to a point to where if you feel like if I lose, it's okay because I traded along with my plan. Once you feel like that, your winning percentage will drastically outweigh your losing percentage because you're trading alongside your plan. And if for some strange reason, last thing, some strange reason you're not trading with your plan, or you are and you're still losing, it may be time to get a whole new plan. And that's okay to come to that realization.
And that's where a lot of people got it effed up. They want to get those big profits so heavy, meaning they see me or they see another trader, they see this trader, they see this trader having crazy days. You guys see me on YouTube. I think my last video was how I made 25,000 on EJ. Yeah, that was in one day, but that was like days of preparing, like a week of like monitoring, making sure everything was all good, right? Ugh. Making sure everything was all good. You guys shouldn't look at it as I'm gonna up my lot size just to get to that 25K in a day. You shouldn't do that. People think you have to win every single trade. You don't. You can have a 30% win rate and still be profitable. I made a video, I think 2.5 years ago, where I talked about even if you have a 30-40% win rate, you can still be profitable. It's the risk management. Is it a 1-to-4, 1-to-5, 1-to-6? If you keep that as your risk to reward ratio, you'll still be profitable. Once you get to that point where you are like past the technical analysis phase, focus on psychology and risk management. Because I'll tell you right now, how many times have you guys watched this video, or those watching this video, how many times have you guys looked at a trade, you understand everything about the trade? The candlestick patterns, what's about to happen, the reversal, this, that, and the third, but you won't place the trade because you're waiting on another confluence when you already got 5 confluences. That's psychology. And then for the risk management part, you see somebody who made X amount of money, you're in a group, you're in a community, somebody else made $1,000 off the same trade you did, but you only made 200. Now you're envious. Now the next trade, you're gonna over leverage, then you're gonna blow your account. You should never ever blow your account when you're in like your 3rd or 4th year of trading. Like your first year, yeah, because we all want that money and we think trading is easy. We've all blown accounts before. I'm gonna be done with this video in a second. We've done it before. But once you get to that 3rd or 4th year, you realize if you blow your account, that's just you being really, really reckless because you're really risking all of your account on 1 or 2 trades. You can't do that.
What would you say are the 3 main things that you need to do for a business to function very well and grow accordingly?
You gotta be a salesperson, no matter, first of all, like that's the number one thing. And it's crazy because like I never considered myself a salesperson until I saw myself. I want to say maybe 3 months ago, I saw all the launches I did and how I sold. I'm just like, oh wow, this is just innate. Like I
It wasn't
never
studied or planned. It was just
studied. Yes, like I read a lot of books, right? Like I read a lot of business books, and I read a lot of like how to win friends and influence people. So like I read a lot of persuasion books, things of that nature. But it wasn't planned in terms of like I didn't study sales. I never bought a sales course in my life. I never did any of that type of stuff. Every course I bought was either trading related or like entrepreneur related, things of that nature. But it was never sales. But you have to be a salesperson, no matter, or have somebody who's a salesperson to at least sell for you. Because, and I also think it's better if the CEO does it, because I see a lot of people, businesses, whether it's prop firms or educational businesses or anything like that, where they'll be the CEO, but they'll have somebody creating content for them, and then they wonder why their views are low, right? Like if people are there for you, and I understand you want to build a business that's like not reliant on your face and your brand. I totally understand that, and you should in some ways. But there's some ways where you still got to be at that center for as long as you can until you physically can't do it no more. And that one of those ways is sales and content creation. When you're doing a launch, nobody should be doing that launch for you. You shouldn't be paying somebody, $3,000, $4,000 a month to put a camera in front of their face, say, "Hey guys, so this is what we're doing today." They want to hear from the CEO. It's his business, right? Her business. So sales is the first thing. But the second thing is you have to have some sort of empathy when it comes to your audience and knowing what they want. You have to be in the know on what your product is and how can it benefit them. Because there's a lot of things that people can come out with. And I've seen people come out with businesses that just don't work. And I never quite understood that just yet, only because I've never had a business like ever that, and it sucks to say this, but like never like failed, if that makes sense, right?
Okay, wow.
Like I've done stuff in the past from when I was, in 2014, 2015, 2016 that like were just little stuff and like didn't work out cool. But like in terms of creating an LLC and getting an EIN number and making it an S Corp and filing taxes, I've never had a business do less than $2 million ever. Not never. And I think it's because I had the empathy in terms of looking at my audience and, like I said, understanding what they want, but not being greedy. I don't need to like charge people so much money. And if people wanted their money back, cool, get a refund. I'm not somebody who's just gonna like hold your money and keep your money. And I think because, like you mentioned about Alex Hormozi, that's built the goodwill of myself in this industry, and they trust me in that regard, So the first thing is you got to be a salesperson. The second thing is you got to know your audience, what they want, and have the empathy. And number three, you just got to keep trying. Like no matter what. I feel like people like will put something out there, and this is a big thing. They get nervous about their own business, like something they're very passionate about, right? Prime example, we're on your podcast right now, but I know people like you who have a podcast, but they're scared to post a podcast. They're scared to post every day or every other day because they're worried about their following, and they're just like, people are gonna unfollow me, and I don't want to do that. It's your brand, it's your social media. If they don't want to follow you, cool. Your message is not for them. Your business is not for them. And I see people who have the coolest businesses in the world, but they post about their business once a month on social media. And I saw a post from Rick Ross like last month. He's like, if you are a part of, the MMG brand, the Rich Forever brand, you got to post and rep the brand every single day. That means shirts, that means online. And he said, if you're not posting about the brand every single day, it's disrespectful to me because we're in this situation. I put you in this situation, this environment. I created this multi-9-figure business for us all. If you're not repping the brand, that's a slap in the face. And this is why I, as in Rick Ross, post every single day. I'm out there, MMG, Rich Forever, this or that. And when he said that, that kind of resonated with me a lot because here I am in 2021. I'm still posting a lot, but being a perfectionist. You know what I mean? Being not trying to be wary of what I'm posting and how I'm posting. And then it got to 2022. I was like, I don't care no more. I'm going back to 2020. I'm posting every single day. Okay. Every single, I don't care. And I had one of my biggest months business-wise in September of last month. And if you look at how many times I posted that month, I think we did 15 videos on YouTube, and I think we did maybe 17 posts on Instagram. And I haven't done that output since.
Stop trying to turn a $20 account into $2,000. I was in college and I was a broke college student, and all I had was 20 and 50 and 100. And on my Instagram back in 2014 and 2015, even in the little Telegram group chats and GroupMe, I don't know if you guys are too young to remember GroupMe, but that was a thing back in the day. That's all I would see. People flipping $50 accounts into $5,000, $20 accounts into $2,000. So me, I thought that's what I can do. And I would blow accounts over and over again to the point where I actually sat in my college dorm thinking, is this for me? Granted, I never quit, but I was having those doubts in my brain. Like, is this for me? Because I couldn't flip an account as opposed to learning
hey, you're not going to get rich overnight. Hey, you're not going to turn a $20 account into 2,000 overnight. Granted, I'm not going to put the blame on them, because when I first opened my account, you all know the story. The very first day I put money in the account, I made $250 my very first trade. So in my mind, I'm like, okay, I can do this over and over again. And then obviously an hour and a half later, I lost like 150, then I lost like 100. And then it was just, you guys already know the story. What I'm trying to say is I would not try to flip an account if I learn like how to trade today. That can be a thing I do in the future, but it's a mindset thing. I wouldn't wrap my mind around, I'm going to try to flip this account within 60 days so I can pay this off. And if I can't, then I don't know how to trade, because I'm giving myself negative beliefs already about this market when we can't afford that. I market execute when I think the market is ready to move. And what I mean by that is a lot of people are waiting for 3 confluences, 4 confluences, 5 confluences. If I got 2 or 3 and I feel like the market is like ready to move, even if it's not ready to move, like that's what I actually meant. The market is not ready to move. Obviously I'm solving Rubik's Cube, so I'm trying to multitask. If I feel like the market is not ready to move yet, but I know what it's going to do, sometimes I for sure will just market execute for my first trade. And then my second trade, what I will do is put a sell limit if I think it's going to go up a little bit, like retrace and then come back down, or place a buy limit if I think it's going to come back down and then go up. And the reason I do that is I don't want to miss the trade. So me as a swing trader, being in drawdown does not scare me at all. It scares a lot of people. It does not scare me. Why? Because chances are my stop loss is probably going to be like 50 pips, 60 pips, 70 pips. So I can afford to be in drawdown. If you are a scalper, this rule technically cannot apply to you because your stop loss is only 7 pips or 10 pips. But a lot of the times, you guys will see, a lot of the times where I'm trading or I'm posting my results online, I will be in 2 trades, whether those 2 trades are close or 3 trades, and 2 trades are close and 1 is a little bit further because I had a sell limit or a buy limit. I do that all the time. And I want you guys who are swing traders or even, a little bit of day traders to kind of do the same thing. And again, the reason is, a lot of times you guys will be scared and upset that you missed the entire trade. You guys said, all right, the market's gonna get here. I'm gonna go play basketball and it should move during London session. That's what you all do. Oh, the market should move during London session. What if it wants to move now? What if it wants to move, in 2 hours or 3 hours from now? Chances are you're gonna miss the trade if you wait that long. The chances are I don't wanna miss that. So I will market execute now. And if I'm 30 pips in drawdown, I don't care. Like, that does not faze me whatsoever. And I think it fazes a lot of people and it scares a lot of people, and I'm hoping it doesn't anymore.
What would happen if you didn't quit? Right, just one time. Like, what would happen in your life if you didn't quit for once, if you just stuck through with something in your life? And the reason I'm asking this question is because I just went through my old email and I found an old trading video of me in 2016 and 2017 grinding. And to this day, 6 years later, 7 years later, I still trade the same way. I didn't quit at all. And you guys see me now, you guys see my life now, and all of a sudden you're just like, well, I want to get there and I want to get there. How do you think I got here? It's been 7, 8, 9 years of me working. The video that I just found was 6, 7 years ago, but I've been working since 2014 to get to where I am now. I see some comments in my YouTube videos sometimes of some people saying, like new people who don't really know who I am, oh, this guy's rich. He grew up with a silver spoon in his mouth and his family was rich. It's easy for him to talk. What are you talking about, bro? I was homeless twice. I barely had money to afford, not even barely. I didn't have any money to afford the private high school I went to. Luckily, a mentor I afforded a scholarship and a mentor paid for it. Not a mentor I knew, it was like some anonymous mentor at the time. And then I ended up meeting him, we ended up having a good relationship. But the point I'm trying to make is, I was always in the trenches. And when I made that video of me trading, I was in the trenches. A 700 square foot apartment, 2 bedrooms. My bedroom was the absolute smallest. I barely had anything to my name in 2014, 2015 when I dropped out of college. And then in 2016 and 2017, I started finding my groove in the market. Started making 2,000 and 3,000 and 5,000 and 4,000. And yeah, I was still breaking even here and there, of course, and having some losses, we all do. But the point I'm trying to make is I was grinding and I didn't quit. And now 6, 7 years later, it's a crazy feeling for me to go back and watch that video and see how I was trading back then, to understand I still trade the same way now, and all I did was hone in on my craft.
Save up, save your money, stop spending so much money, and do it now before the recession comes, because you never know when you need actual physical cash. Stay liquid. I talk to people all the time who right now are buying depreciating assets. And when I say stay liquid, I don't mean like don't try to day trade or don't try to invest or don't try to make money, because everything you're putting your money into has a chance to make you money back. What did I just say a few seconds ago? Depreciating assets. Do not buy any depreciating assets. I'm talking about don't buy no sneakers. You don't need any more. I don't care if future concerts are on sale for $500. You want to go with your friend. Do not do it. I have a friend who texts me all the time talking about, and I don't want to put them on blast. I'm not going to say their name, but realistically, I'm not even lying. Like, yo, like I don't really have any money. Like I'm struggling, boom, 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 boom. And then every Friday night I see them at a concert or at this and that, spending money that they have. And their excuse is, well, I deserve a break. You deserve to be broke too because you're spending your money on depreciating assets. Save your money during a recession. And to continue on, make sure you are reducing your expenses. There are some things that you cannot reduce. I'm not talking about the necessities. I'm not talking about you spending a little bit of extra money funding your dreams or things that you think can make you money in the future. I'm talking about, like I just said, depreciating assets. Cut your expenses, which is why a lot of companies are letting people go. Companies like Amazon and Tesla and Stripe and Slack. A lot of people are doing these things, and even my company. And if my company is doing that, a lot of companies are cutting expenses as well. So you as an individual, go on a Google document and outline all your expenses and figure out what are the things I can live without for the next 24 months, right? Let's say 12 months right now to at least prepare for the recession. Then the recession comes, it may last 1 to 2 years. Like start right now and see what can I live without for the next 24 months.
Here's the plan, the overall plan, back to his point, Nishan's point. Here's the list. One of the last few slides. Get rid of your personal feelings regarding debt and bills. Trust the process and don't take any shortcuts. Always trade with the 1 to 3 plus risk to reward ratio, 1 to 2 if you have to. Understand that you're young. Everything will come. You are so young. Even if you're 36, you're young. You have your whole life ahead of you. Live to trade another day, right? Next play mentality. If you want a risk number, 2 to 4% is fine. 5 to 8% is aggressive. Somebody commented on my video saying, how do you grow your account with risking only 1% per trade? I don't risk only 1%. If it's a bad trade, maybe. Everybody out there says only risk 2%. I understand that. I don't do that. I'm aggressive sometimes. Sometimes I'll risk 3 or 4. If the trade is amazing, I'll even risk 5 to 8%, even 9%. And that's not the norm. That's not necessarily what you should do, but I'm a risk taker, right? Like I know that I'm not gonna lose 10, 12 trades in a row and my winners outweigh my losers. So yeah, I may, if I have $100,000 on my account, I may lose 6,000 in the trade, then 8,000 in the trade, but my winners will be 30,000, 40,000. So I can lose 2 or 3 and then have 2 winners and I'm golden, which goes back to that win rate percentage we talked about earlier. Lastly, realize emotions plus risk go hand in hand, no matter what.
Retire your family members as soon as possible. What I mean by that is exactly that. You don't got to make $1 million to retire your family. Come on. Some of you guys as family members are living off of $3,000 a month. And if you make $8,000, $9,000 a month from trading, yeah, and you stacked up for 3, 4, 5 months at a time, yeah, I would tell my mom to quit her job, because seeing her home happy, one, gives you the support to start trading. But the reality is now you got a little bit of a pressure on you, like a healthy pressure to make it, to keep going and provide a better life, because now you're not only making $6,000, $5,000 a month because the $3,000 is going to mom or dad per se. So if you're making that extra money, please retire them, because it keeps them calm. It keeps you happy in the back of your mind knowing your 60-year-old mother is not working no more because of the hard work that you've done. And like I said, you don't have to make $200,000 first. You can make the 7, 8, 9,000 a month first, the 10,000 a month first. And if your parents' bills are $3,000, yeah, I would rather pay that than try to get to 25 and then retire them. And that's only if their bills are like 6,000 a month, and yes, scale up, save up, whatever. If their bills are 2,000 a month, you can probably alleviate some of that and then work harder because they don't got that many years left to live. So you want them to be comfortable. We, without any, natural disasters or accidents, we probably got about 60, right, to 70 years left, basically. So we can still, like I said in the beginning, use up our health to get more wealth, and we can still push forward so they can be more calm. And you do that, your trading may become a little bit better because you're now focused and locked in, because you got a reason to be locked in. When you're just doing it for yourself and there's no pressure or nothing on you, there's no reward.
A lot of people and a lot of traders
know how to trade, believe it or not. They just don't know how to manage their psychology and their risk, which is why a few things. One, some traders use EAs because that completely, takes away the psychology part. It keeps their strategy, but takes the psychology away, right? And if you don't know what an EA is, expert advisor, basically a bot that basically trades for you, basically what your strategy is. Like it's coded. The algorithm is basically whatever your strategy is. If you're asleep and 1 o'clock in the morning, the bot determines this is what your ideal setup would be. It would enter basically for you as many times as it possibly can with staying within your risk limits, right? So people do that to limit their psychology. Or the second thing is now you have access to capital, right? Go back to my main point. Most people know how to trade and can talk about it, but when you're doing that on a $200 account, people can't just manage their psychology like that. People can't just, manage what they got going on and get over their greed, right? So when you have a 100K account or 50K account, then the breathing room gets a little bit easier, right? It gets a lot easier because you can, afford to use a standard lot 0.50 and be more happy with the $900 win or $1,800 win, right? Now your rent money's getting covered, right? So that's number 3, right? Like when you get to that point in demo, get to a point to where, and you're on a funded account or try to get to a funded account and get funded, right? You guys gotta have patience. If you guys are not gonna have patience whatsoever, trading is not going to work for you. And I'm a swing trader. If you're a scalper, I understand you can't afford the 10, 20, 30 pips in drawdown. I'm a swing trader. I was 30 pips in drawdown, 140 plus pips in profit. What does that mean? That's like a 1 to 5 risk to reward ratio in that sense of what actually happened, not like the take profit to stop loss ratio, just what actually happened. 30 pips in drawdown, 140 plus in profit, and that's for gold. It's not even including GU. So please have patience, guys. Understand things take time. A lot of you guys will be more successful if you let your trade play out and gave yourself more of a breathing room for your stop loss. That's one of the biggest issues that I see traders face daily. You're right in your analysis. You're right in the direction where price is going to go, but you have this 5, 10 pip stop loss and gives your trade no room to breathe. And then what happens? Then it's an issue. And I don't want that to be the issue anymore. So give your trade some room to breathe. If you just gave it an extra 20, 25, 30 pips of a stop loss and move the take profit to an area where you can hold it over a span of 1, 2, 3 days, you'll be a lot more fine. As far as trading, we are our own worst critic. We lose a trade, we talk about how stupid we are. We win a trade, we're lit, but we're not really lit. You know what I mean? We're like kind of downplaying it. I know a lot of you guys out there do that as well. Like, I want you guys to know, first rule of this video, stop downplaying your accomplishments in trading. And what I mean by that is this. How many times have you lost a trade and you thought it was gonna go one way, but it went the other? You know what I mean? Like, just regular, how many times you lost a trade and you're calling yourself all types of names, like stupid, like I'm an idiot, trading's not for me, I don't know why I'm doing this, boom, like I suck, I'm just not good at trading. Like all of those negative, right? All of those, right? Those are not positive affirmations. But then when you win a trade, what do? You may post it on Instagram and tell somebody and say it just like this. Yeah, it's not, let me turn this down actually. Yeah, it's not much, just a 0.02, I'm just trying to get my strategy down packed and back test a little bit. It's not much, but it's, it's something. That's still negative. Like, that is still negative. You're not saying, yo, I'm like, I just did this. You know what I mean? Like, a lot of you guys probably get paid, $15, $20 an hour. I know people from the Philippines who get paid $5, $6, $7 an hour to be like a remote assistant. You know what I mean? And you make $70 in the market on a live trade, and you're still downplaying it just because it's 70, because it looks like it's a video game, basically. Trading is basically a video game on MT4, whatever platform you use. It's a video game, and you're just like, oh, $70 because somebody else makes 7,000.
Stop asking for handouts. That actually plays a bigger part on your psyche than you know. That means whenever you pay for something, stop having buyer's remorse. Stop looking at the price tag, things that, like, obviously, like, pay according to your budget. But in terms of actually spending the money, I get a lot of comments all the time. Swaggy, if you were really helping people, everything would be free. Are you guys drunk? Like, if WWE really wanted to make a change in kids' lives, all their events would be free. If an author wanted things to be free, they'd write all the books for free. Harry Potter wouldn't have been a series or a movie film. I can keep going on and on. Tony Robbins, let's go to Tony Robbins, right? He's a life coach and he helps people out. He actually changes lives. Do you know how much his seminars cost and like his mentorships? It goes like $10,000, $5,000, $15,000. He even has like a $100,000 price tag. And guess what? There's people out there who pay it. And that's where the mindset shifts. People want to say, oh, the rich get richer, the poor get poor. No offense, the rich has a mindset, or those trying to get rich have a mindset of, I'm going to spend whatever money I need to try things out. I told you guys all the time, I bought 9 different courses. I spent over $30,000 when I didn't really have it. That meant like babysitting my ass off in Greenwich over and over again and then throwing that to this course.
And a lot of you guys understand that this can be the one thing that brings you out, but you guys are thinking like, if I don't do it in a year or 2 years, I'm quitting, or it's a scam, or the teacher that I learned from don't really know what he's doing. You guys will blame everybody but yourself. I took 8, 9 different courses from the 6 people who I didn't really learn from, I didn't really take too much information from. I never called them a scam, not one time. All I said is their strategies don't work for me, but more power to them because it works for them. And guess what? I finally had my aha moment. I finally had my breakout season. And guess what? 6, 7 years later, you guys see me now. Private jets, beautiful wife, beautiful daughter, courtside at NBA games. My mom's retired. My brother's retired. College debt is all paid off from all my family. And that came because I took the time in this market. I took the time to understand business. I took the time to understand people. I took the time to understand myself. I took the time to understand trading. And I didn't give myself a time limit. And the reason I'm so passionate right now is because a lot of you guys don't think I was just in your position a few years ago. You guys think this was just easy to me, like I wasn't just in your position, buying courses, buying signals, being in Telegram chats, reading free information, reading books. I was doing the same thing you're doing. The difference with me and the difference with the 1%ers in comparison to y'all is some of y'all quit. And for those who's watching this video who are on your last leg in this market, I'm telling you right now, try to find some energy and understand you don't need a last leg in this market. You shouldn't care if you're 39, 29, or 19, it does not matter. Just imagine if you didn't quit.
Please reward yourself when you are trading, no matter what. Like, reward yourself. Like, whether that is retiring somebody, or buying something. You are never going to look at trading as a very, very serious endeavor if you don't reward yourself. And Q talked about it in our interview where he'll be up 120,000 if he doesn't close. It's just video game money. It doesn't feel real, right? Same with me. You have to close and put it into your bank account for it to feel real. Once you do that, then it's like, oh, this is real. I actually can keep this. I can do this. And then you can start buying stuff with it, and you realize this came from trading. When Q gets, his exhaust from trading profits, all this came from trading. When I pay rent from trading profits, it's like, oh, I'm living here because of trading, right? Or when I'm changing somebody's life, oh, this started from trading, right? You gotta reward yourself no matter what. When I go on a trip to Cabo with, all the team back in 2021, oh, this came from trading. Yeah, this is the reason why I work hard. If you don't reward yourself, you're gonna be working in an endless loop and you're never gonna get it. Reward yourself, reward yourself, reward yourself, no matter what.
The top 1%ers of the world operate in a certain capacity, whereas 99% of the world suffer from insecurity, fear, pessimism, and more. And me being in the top 1%, I had an idea to create the very thing that most successful people credit their success to. Affirmations. Now I know what you're thinking. Swaggy, what the f does that mean? I will tell you. You see, over the past 4 years, every time you guys have seen me, what's the one thing I always have in my videos? It's not the iced out chains. It's not the Tesla. It's these things, canvases, some of my most prized possessions. For me, I absolutely cannot live without them. Even when I was dead broke, 9, 10 years ago, these were the things that got me through, waking up every single day and seeing the same message over and over and over again only reinforced my goals. Let me take you through some case studies. Jack Canfield had a goal of $100,000. He never even made more than $50,000. He had a picture of $100,000 and he taped it to his ceiling. So the first thing he saw when he woke up and the last thing he saw before he went to sleep was his goal of $100,000. And guess what? He smashed it within a year before changing that new goal to $1 million, which of course was smashed too. The law of affirmation states that positive thoughts and actions reap positive rewards and results into a person's life. And so the reason being is that when you see something all the time, it does one of two things. Number one, affirms that you're doing the right thing. And number two, it tells you what to do when you're getting distracted, which is the action part. Even Q Banks just told me he had to have his trading affirmations on his wall to do. Remember, the first thing I mentioned was affirms that you're doing the right thing. He said he could just remember the $150,000 goal when he's trading, but if he doesn't write it down, he does not stick to it. Big difference.
On my board now, it says 150 over plus, close. Because I have no reason to want to make more than 150, I feel like. I'm saying like past 150, come on.
So you gotta have that like as an affirmation on your board, something you see. Like,
Or I have to. Because if it's not on my board, like I can see 150 on my charts and I'm like, yeah.
it's play money, yeah.
play
It's
money.
nothing. I get you.
But if it's on my board and I'm saying 150 plus, I have no reason to keep on going.
And this is why I've been talking about I have 4 major launches coming in the next year. This is the first one. All of those reasons above are why I created my new company, Commas. Commas is an art company that motivates and inspires the next generation of entrepreneurs and traders to reach their goal, which is add an extra comma to their paycheck.
What should a person's broke journey look like when they are on the path to become a profitable trader?
So believe it or not, I think this is a lot easier. You know, even though trading, the stats may not quote unquote say it, it still is in a sense where I said the stats don't say it in terms of 90 to 95% of traders lose, right? But regardless, in that sense, it's just you. It's you versus you. It's not you versus 100 people. Like, it's not entrepreneurship where you got to figure out how to sell something, a product that you created, or a product you're passionate about that 1,000 other people in the world may not be passionate about. You know what I mean? Like, in order for your business to thrive, people have to care about it. Trading, nobody got to care about it. It's just you, right? So in terms of the path today in 2023, people may watch this in 2024, maybe is a lot different than what it was a decade ago. Almost a decade ago I got started, right? I got started in 2014, so next year I make a decade. And back then the path was to study baby pips, then buy a course, then go on a demo account and trial and error, and then get funded on a live account, like put some of that money that you got from work, $250, $500, $1,000 in a live account, and then try to make it from there, right? Back then it was Trader's Way, it was Hugo's Way, it was LMFX, things of that nature. Nowadays, there's prop firms, and that is by far the easiest way to become a profitable trader, because all you have to do is learn the process, whether it's from a course or YouTube. Preferably, I would say a course, no matter whose course it is, only because you're learning from somebody who made it, and you're getting, so prime example, people think when they're buying a course, they're buying like a golden key and the holy grail. That's not why you're buying a course. You're buying a course for direct information from you in an organized manner, because YouTube, we can post whatever we want, whenever we want. We're not nobody's paying us to post every single day, whereas when you buy a course, they're like, they can demand you to be on a webinar. They can demand certain stuff like that, right? You're paying for access to a community, right? So you can't find somebody on the street who's a trader. You can't find somebody in their city who was a trader, maybe 2 people, right? Mm-hmm. But then you're paying to get access to 1,000 other traders who are in your exact position, who know how you're feeling, who you just lost today, this person lost last week and felt the same way you did, and you can grow together. That's what you're paying for. So back to what I was saying is, learn on YouTube, then go the course route, right? And then once you got the information, the trial and error, start a prop firm. It doesn't matter if you fail 10 prop firms. If you pass the 11th or 12th one, you're funded. You got a 10K fully funded account, 25K, 50K, 100K, whatever the case may be. And now you have more breathing room than the Swaggy C's, the Q's of people a decade ago had. I mean, I've seen more traders become profitable and leaders in this industry from getting funded on a prop firm and having a 50K payout and a 100K payout, then I've seen people trying to put money on a broker account and flip it, because that's hard, right? Yep. That's like not 1 in a million, but I'm just gonna say that for the sake of the video, it's 1 in a million. Whereas prop firms, it's like, there's average people who just, like a lot of people out there and in your community know how to trade. Yep. They just don't know how to manage their psychology as much. Mm-hmm. And with a fully funded account, I'm not saying that automatically takes it away, but it helps because psychologically, you have a 100K account, a funded account, and now you can afford that breathing room that you can afford on a simple $100 account.
So for example, you don't want to be on the wrong side, because I talk about being heartbroken in the market all the time, meaning if price is making higher highs and higher lows and you just put your stop loss, my face is right there, I gotta delete it so you guys can actually see what I'm drawing. If price is going up and as it's coming down, you just put your stop loss in profit no matter what, because it's just like, oh, I just want a worst case scenario make $100 or $200. Price can literally come down, stop you out, because it hasn't officially made structure yet. It hasn't really made any higher highs or higher lows yet. And still go up in your direction because you didn't, place your stop loss in a line with the overall structure. So what I would say is keep your stop loss in the negatives, like wherever it was where you started, until price creates structure. So if price is like this and does this and does this and does this and does this, as price is right here, your stop loss should still be down here, like in the negatives. Like worst case scenario, this happens, right? Then if price is coming down to retrace itself, you can obviously leave your stop loss, move it up to break even, because if you are 40, 50 pips in profit, you don't want to be 40, 50 pips in profit and then price comes down and you lose money because you were profitable. You know what I mean? So you can at least move your stop loss into break even, which is your entry. So worst case scenario, you don't make no money, you don't lose no money, $0, right? And as price is coming down and like plants right here and starts to go back up, then we're able to move our stop loss from break even to right here, anywhere below here, right? And then price goes up, comes back down again. Then the minute it goes up again, we can move our stop loss from here to this one now. Does that make sense? And the reason, again, we're doing that is because we know that if price stops us out, it is no longer an uptrend. So price is doing this and 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 this, and we actively moved our stop loss every single time, and then price came down and stopped us out over here. Guess what? It won't stop us out and then continue in the uptrend. Why? Because it broke structure. This is not a higher low. This is not lower than this low. You know what I mean? This is now a, lower low. So what price would do in that scenario is stop you out, come up. Now it's trading a lower high. And now it's looking to boom, down, boom, down, boom, down, lower high. And the same goes for selling. You sell, stop loss up here, it goes down, goes up. The minute it comes back down, stop loss somewhere up here. Goes down, goes up, starts to come down, stop loss way up here. And the reason we're doing that is we want a risk-free trade. Now, every trade won't be risk-free because you can't just get in the trade and automatically have your stop loss into profit. You'll get stopped out all the time. You have to make sure market structure is actually occurring.
Do not focus on new businesses. Focus on one thing first, master that, and then move on. And the reason I say it's tricky is because I don't count a job that sustains the quality of life as that. That's still that one thing. I don't count that as two things, right? So prime example, obviously I was babysitting and trading. That's still one thing. You know what I mean? What I mean by that, about my point is, don't try to, become a day trader and then do real estate at the same time and then start a business, on arts and crafts. Like that's three different areas. And that was one of my failures, I would say, was the reason why the Swaggy Academy kind of veered off in 2021, is because I felt like me and Austin were trying to do too many different businesses, before we mastered the one we had. Yeah, we were making, a lot of money with the Swaggy Academy and changing lives, but we didn't have the business on autopilot yet. We didn't have 20, 30 people running, making sure that business is always stable and always good, no matter what, it's safe and sound, and then start the other one. It would literally just be me and Austin, Elijah, Katie, Beth. That's it. And we're just like, oh yeah, it's just us. All right, now let's start this business. Let's start this one. Let's try to do this one. And we kind of neglected the Swaggy Academy for about 2 or 3 months, and then it got into a whole frenzy in terms of doing different sales, and then going back to doing webinars, and it was just like, stay consistent in one thing and then move on. Like I said, this is a video called The Things That I've Learned Over Making the Money that I've made. Focus on the one thing, and then once you master that and get it on autopilot, then you can do other things. And right now, I feel like I have a lot of things on autopilot. I have the lab on autopilot. Obviously, you guys already know at this point that I left Secure the Bag, but Secure the Bag was pretty much on autopilot. My new prop firm will be on full autopilot. Everything I'm doing right now is making sure this is all good, then move on to the next thing. So when you guys right now have your job and have day trading, great. But the minute you either make it in day trading or have enough money saved up, then have trading in a business or something like that. The prime example, I was talking to Q and Raul, and once they made it, they didn't just stick to day trading. They started educating because one, people started asking them how they do this, how you make this much money, and why not get paid for it, right? And it's the same with me, right? I had no desire to teach whatsoever until I started posting my results, and people were like, oh, teach me. And at the end of it, I had like 500 DMs, and I had to send 500 free emails like, hey, this is what I do. And I was like, you know what, I should just charge for this. And that's why I only charged $200 at first, and it was like overflow. So once you make it in something, it doesn't matter what it is, it could be day trading or not day trading. Once you make it in something, you can charge for your knowledge, because people would rather pay you, somebody they know, for your knowledge that took you 4 or 5 years to accumulate than read a book and go on Google because it's free. Talk about getting to that point of those $100,000 weeks. Do you think that's attainable trading a major, or it has to be a pair like a US 30 or, you know, even a gold per se?
Nah, bro. I think it's more. It's not even like pair based. It's more just applying the pressure base. Like I was talking about this like last night, about greed. Like what do you think about greed
In terms of trading?
Yeah.
People have a lot of it, and for me, I made a video a few days ago about like, I don't care if it's 10K or I don't care if it's 50K. Like, I'm gonna be very, very happy, but I feel like a lot of traders, you know, want more than the charts actually give them, and they end up blowing their account because of it.
But you don't think that greed is also pretty important in some kind of way?
Greed, selfishly, like, you know what I mean? Like, I gotta be greedy to a certain extent to want to get more, but I feel like, you know what I mean?
As far as like a positive pressure.
Yeah, a positive pressure.
That has to be applied to actually break that barrier. Like, let's say if I was so satisfied with only making 50K trades and that kind of stuff.
Yeah.
How would I even get to $100,000 trades? I have to be greedy at least a little bit, want a little bit more to even break past that barrier, so I can see like what I'm capable of. You know what I'm saying? So I feel like I mean, that's just a very, very important thing to actually have in some kind of way, because you got to pretty much be greedy, but also understand that like you're being greedy in some kind of way to actually push yourself to that next level.
The first thing you have to do is remove your personal feelings away from everything. Like, everything. Remove all your ego, your pride, your personal feelings on what you got going on in your life, because you got bills. The market doesn't give a F. You're in debt. The market doesn't give a F. The market ain't get you in that debt. The market ain't put you into college. The market ain't make you take that loan out. The market ain't make you, you know, rent that house that is way more than your means. The market ain't make you move out too early. The market ain't make you, you know, get that Mercedes when you should have got that Nissan. The market ain't make you do none of that. So the market does not care about what you got going on. The market can only provide you opportunities, and it's up to you to use your judgment in that scenario and be like, okay, I have this opportunity. This may help in this regard. What am I going to do with it? What is your strategy, and what is your best strategy? This is an easy question, but it's a tricky question, because I've shown my strategy so many times on my YouTube videos, and people will try to learn it, and then within 2 months, try to learn from somebody else and learn from somebody else, and think, you know, my strategy may be basic because I don't use complex terms and I don't use order blocks. Like, everything is literally the same. It's just called differently in this industry, right? Like, what I'm teaching is not BS. What I'm teaching worked for me. Now, it may not work for everybody, but it worked for a few of my 6-figure students and 7-figure students, right? It's okay to, you know, learn my strategy, which simply put is price action, right? I trade technicals, but I obviously look at the news a lot, that little lightning bolt on TradingView. I will read literally for an hour during Monday through Tuesday and Wednesday throughout the week, just to make sure I am not trading based off the technicals alone. And then the whole sentiment and fundamental analysis is a completely opposite direction, right? I combine those two, but I don't use too many indicators. I use just one, a moving average. I use psychological levels. Them key levels are very, very, very important. And I trade trend lines. I literally trade price action. And people think they have to make trading more complicated than it actually is. No, you simplify it, you make more profits. At least that's my philosophy, because the people who overcomplicate trading, put them against me side by side in a trading competition one-on-one, they will get smoked. And that is the reality. Make sure if you have a bias and the market is telling you something different, don't be stubborn to try to prove a point to social media to your peers. It's okay to be like, yo, UJ is going down. And then a day later, yo, nah, UJ's going up. Like I thought it was gonna go down, but it's going up right now. It's okay to change your bias. You're in the business of making money. Like Dana White says, we're in the fight business. You are in the money-making business. Like, you get paid for the right decisions, not being correct on social media. You get, you know, paid for clicking the right button. Period. End of story. The reason in my story you guys hear that, like, oh, Swaggy wasn't profitable until year 4.5, almost year 5, is because for me, and I have a blank chart right here, right? Because, and I got right here, 3rd year of trading results, important info, let's say number 1, right? I wasn't profitable until my 4th year and a half because I wasn't tracking and journaling, right? When you go through my 1st year and 2nd year of trading results, right, and you see me like showing screenshots from my notes and screenshots from Snapchat and screenshots from a little notebook, that's because that's how I journaled. Like I said it in all my videos. I never used a MyFX book and all these tracking services until like year 4.5, right? When I started actually jotting things down and tracking things for the better, then things started to change because I was actually able to go back and look at my chart, right? Like if I go on just right here, right? I'm able to go back and look at the charts. These are my charts right now in today's time, right? Just in general on a daily time frame, right? I was able to see why I won a trade and what happened with it, see why I lost a trade and what happened with it. Whereas before it was just, I'm just gonna jot it down on my notes or jot it down because you guys remember I had like a massive red notebook that I carried with me everywhere. So I jotted everything down and then I ended up losing the red notebook. And then once I lost the red notebook, that's why when I started to like, let me jot down in my notes fully and like take full advantage of it because chances are iCloud is not gonna just get lost, right? But I did start to turn up, but there was a lot of inconsistency, right?
This is also important too. Spend the money, and when I say spend the money, I mean on a mentor or a program. And I'm gonna say this very, very carefully. I say this all the time. This does not necessarily mean me. I don't care if it's all of my competitors. I don't want to hear you guys saying I'm trying to be better at trading and all you're doing is learning for free on YouTube. Go spend the money on somebody's program who has all the knowledge in the world. I was talking to Umar as well, Umar Ashraf, one of my good friends, and he was talking about like how he spent $25,000 learning from like somebody who's in a better position than him. This is a guy who makes over 8 figures a year. I said the same thing in terms of, bro, I spent $20,000 on a one-on-one mentorship with somebody as well, and I'm in a good position according to all of y'all, always trying to get better. And when you have all of these people out here who you guys look up to, me, Q, Astro, Raja, Raul, Alex, Trading Channel, Day Trading Addict, like everybody on this platform, but then it's like, you guys have the mindset of, oh, it's 200, 300, I don't want to do it, I'm going to learn for free. You're not going to get anywhere learning for free. Why? Because there's so many things that you can access for free, as opposed to something structured from A to Z, from the bottom, from somebody that you guys look up to and, you know, look as a role model in terms of where you want to be several years from now. Not live above your means. So let's say, for instance, and we're not talking about the newbies who's still trying to find their way. We're talking about those, like, once you get to that point of, like, I'm actually starting to make money in this market, like, what should I do with it? First of all, do not live above your means. So if you have a crazy month where, yo, I just made 80K, don't go out trying to buy 50K worth of jewelry. That shouldn't be a thing. Oof, missed that one. I'm not gonna miss it again. I missed it again. Oh boy. Anyway, that should not be a thing. I was talking to one trader who did something crazy and he like made like maybe, I think 67K in a month or something like that. And then he was like, yo, what I'm gonna do is I'm gonna buy a supercar to show off the lifestyle and then try to start a course. And bro, what? No. Like, I don't know why that's the first thought in people's mind. Like, my mindset was never, I'm gonna make money, then I'm gonna do this, and I'm gonna start a course. It was never my mindset. I was posting my profits on social media, as you guys remember, and then I started to get bombarded, because obviously I had a lot of followers at the time, about, can I teach them? Can I teach them? And I'm like, all right, I'll just create a course. Do not try to live and keep up with the lifestyle. You make a good amount of money. Don't try to buy chains. You guys may see this, like the Rolex, this bracelet, the ring. I got my chains if Bryce shows over there. Got my chains over there. Like, I got them all. That was after millions of dollars made already.
Yeah.
Big time.
So what advice would you give to me personally on how to achieve that 10 million mark?
So, number one is you gotta understand that what you did to get to 7 figures won't get you to 8. And I know that's cliche, but I've lived it firsthand. Like, I tried to do the same things that got me to 1 million. And yeah, it got me to 2, but it didn't get me to 5 and it didn't get me to 10, right? Like, there were some months where, let's say I'm used to making, let's say, 800,000 a month, right? 700,000, between 7 to 800,000, right? Sometimes 9. I would do the same things, and all of a sudden, it'd be a $100,000 a month, 200,000, 89,000, 300,000. I'm like, what the hell is going on? But it's like the same process you did to get to that point It's not. You got to do something completely different. Change the marketing, change the ideas, the structure, the product, right? Like Alex Hormozi said, like you have to. Which goes into number 2 for you is the thing that.
Let me write this down.
This is probably the best piece of advice I'd have, and it's not even from me. It's from Alex Hormozi, but it changed my life, right? It's $100 million offers book, right? You have to read that if you haven't even read that. $100 million offers and $100 million leads. Those are the 2 greatest, I would say, business books in terms of structuring an offer, right, to get to that next level, right? You have to create an offer so good that people feel stupid in saying no.
Yep.
That is hands down easy, and just like the Rich Man in Babylon, where Arcad was a client doing the clay tablets, and he asked the wise man, like, I know I'm late, but if you tell me, how to be successful, how to be rich, how to handle money, I'll stay up all night and get things done for you in the morning, right? He did that. And in the morning, the guy said, I'm ready for Arcad said, I'm ready for the advice. And the wise man said, well, you'll be successful, rich, whatever it case may be, when you realize a part of everything you earn is for yours to keep. And that was it. And the guy was confused. He was like, is that it? And the wise man was like, listen to what I just said and think about it, think it over. Because if you don't think it over, you're gonna think your last night's work was in vain and you did it for no reason, right? So when Alex Hormozi is talking about making an offer so good that people feel stupid saying no, that's a simple sentence, and it may just pass on, but realistically, I took that and I okay, if I was a student, what would be an offer so good that I would feel stupid? I would feel stupid, right? If I said no, right? I got a course and it's only $100. That means nothing. Cheaper doesn't mean better, right? What is an offer that you can make that people feel stupid in saying no? And I did that recently with my latest lab launch, right? I had if you watch the video, actually when this ends, I want you to go back to your hotel and watch the video that's pinned on my YouTube channel.
I watched it.
Yeah, but if you watch it again with the mindset of what can I do, I offered a product, but I offered it in a crazy way, then offered a refund policy, then told them this is what they're getting, then told them this is not the same as the past, because it's not a membership, right?
Yep.
I know how to make membership and non-membership be valuable to people, because I'm in the business of giving value. I'm not in the business of anything else. I want whatever seems valuable to them, but makes them feel like they have to say yes because it's going to change their life. That's what it is. That's the second thing. Third thing is, when it comes to it comes with you as well. So Grant Cardone, in the 10X rule, he said, I don't ever feel like I'm marketing or I'm selling something, right? I said this to, I think, Reg or somebody else, right? I feel like I'm changing their life. Meaning, when I'm launching something on YouTube or I'm posting about something that I own business-wise, if somebody says no, they're not interested, I genuinely feel bad for them because they're missing out on a dope opportunity that can change their life.
Facts.
And if you don't feel that way about your company or your businesses, it's never going to scale up. And Grant Cardone is absolutely right. You have to actually feel yo, you really are going to pass this up. I don't need the money whatsoever. You can join this in a year, 2 years, or 3 years. I just want you to join it so that you can better your life. Trading is not for everybody.
Yep.
But if you're somebody who doesn't know what they're good at, right? You don't play video games. You hate 9 to 5. You hate school, and you hate certain things. Trading could be a thing that you can try and get better at. And you're not even gonna try, genuinely feeling bad. So the scaling up process, you gotta create a product that's so good that people feel stupid saying no. You have to feel bad when people don't buy from that. But you also gotta operate differently, right? The story you tell is great, but you gotta reach different platforms. You gotta reach YouTube, you gotta reach and I more books as well. Not enough people know who you are, right? Not enough people, and that's the truth. It's the same with me, right? Rick Ross said something, I think, 4 weeks ago that I saw that changed my whole perspective, right? He said, if you work for me or work with me, or you're my family and I'm paying for your lifestyle, whatever the case may be, and you're not repping the brand every single day, you're not posting about MMG every single day, that's disrespectful. That's a slap in the face to me, because I'm creating this empire. You think I'm a create my company?
You leech off of the rewards.
Yeah. Or I'm gonna create my company and not post about it because people don't want to see my posts every single day or they're gonna unfollow me. I'm gonna post every single day. That's what social media is for, to show your life. My life is about my business and my family. Same with your life. So I'm gonna post something every single day, if not every other day. But Rick Ross is like, no, it's MMG. Like, we're posting every single day so that when you come on Instagram, you see MMG, you see Rich Forever. And if you unfollow me, you're not the target audience I want anyway. You're not gonna buy anything. You're not gonna stream any of my music. You're not gonna buy any of my brands, any of the things I got going on. And that's what you gotta get into in terms of scale. If you're gonna get to that from 1 million to 2 to 3 to 4 to 5, you have to change the perspective of that and be seen in front of more people. If that makes sense.